Hi, welcome to this video, which is all about pre-programmed biases in our brains that can cause us to lose at forex trading. And many beginners are unaware of the biases in their brain, and this causes them to lose money. So what I want to do here is go through the biases that we have, and in particular the outcome bias and mental inertia, and why they're so dangerous to forex traders. Now, in terms of humans, there's one bias that we have in our brains which is important to the survival of the species, and that's avoidance of risk. We're basically programmed not to want to take risks. Now, as society has become more ordered, we've tended to take less risk than our ancestors. We don't have to fight for survival anymore. We live in an ordered society, and basically we generally avoid risk in our everyday lives. But in forex trading, what are we doing? We're trading risk, we're trading uncertainty. And moving into an uncertain area like trading risk causes traders a huge problem. They want to make money, but they don't want to lose it. And they basically have another bias, which is called keep what's yours. And that means your possessions are valuable, yet don't want to lose them. So what happens? Traders want to come in with the lowest risk they can possibly have in the forex markets, and they're really attracted to the huge amount of strategies online that offer a high percentage of winners. So they'll pick strategies that got 70% win rate or a 90% win rate. I'm sure you've seen them all over the net. They're all lying. Forex traders don't make 70 or 90% profits as a general rule. This is successful traders. You're going to win about 50% of your trades. So, what you have to do if you accept that you're only going to win 50% of your trades is you need to understand the outcome bias. What is the outcome bias? It's something all successful traders are able to overcome. And it's basically the decision and the outcome are not related. So what do I mean by that? If you've got a simple logical strategy, you put on what you feel is a good trade and it goes wrong. It wasn't a bad decision, okay? You're only trading probability. Now, a lot of beginners, go back and they analyze the trades to see what they might have done wrong. If you are confident in your strategy and its logic, you don't need to do that, because you probably didn't do anything wrong at all. You're trading probability. So you're going to get the market making you look stupid. So you mustn't equate the outcome with the decision. A bad outcome doesn't mean it was a bad decision. All successful traders are able to overcome the outcome bias. And it's essential to help you ride out periods of losses. Most traders will win about 50% of their trades. That's a good hit rate. You're going to lose 50%. What you have to focus on is not the number of winners. You have to focus on the longer term, okay? And the difference between profits and losses. So what you need to do is when you come in the forex markets, accept that you are dealing risk, accept it's all uncertain, but the outcome bias, if you can overcome that and just keep going with discipline and you've got a strategy you believe in, you can make money. Now, in terms of a bias that destroys trading accounts, is mental inertia. What is mental inertia? It means once you've formed an opinion on something, it takes your brain more effort to reverse that opinion. Now, that's not a bad thing in everyday life. For example, I've got very strong views on climate change, poverty in the world. I've got my opinion. It's going to take a lot to change my opinion. In fact, I don't think I will. In forex trading, you have to be able to change your opinion quickly and very, very quickly in a lot of instances. Because when you come into the market, you believe a pair is going one way, it can very often give you signals that it's going to reverse. And you actually have to reverse your opinion, accept you're wrong, okay, and get out. Now, in terms of most traders, what they do is they a confirmation bias in the brain. We all do. We want to be right. So they'll try and confirm their existing opinion. Even though probably deep down they know the opinion is wrong. They don't want to lose money, they don't want to look stupid, so they'll stick with losing trades, for example, and end up losing money. So what you need to do is question your trade every single day. What has changed? Should I change my opinion? You've got to be very, very quick in changing your opinion in the forex markets. Now, another bias we have is what's called the recency bias. Now, the recency bias is basically the human brain is basically programmed to pay more attention to short-term events than longer-term events. You'll basically retain the shorter-term events. So what do I mean by that? Well, if you take, let's for example take news in the forex markets, you very often see these financial channels, and they're on all day, and they will basically be talking about the market action, and they'll be justifying moves in short periods of times, what might have happened to cause it. Nothing actually probably caused it at all. They're just fitting the news to the price action. Now, many traders, the problem they have when I talk about the recency bias is what they believe is that the recent news, all that sort of every hour news, every news event is important in forex markets. It isn't. That's why traders want to trade short term. They believe it is because they see news channels. It's not important at all. You've got to see the bigger picture. And this is why I always say day trading and scalping is such a waste of time, because all you're doing is just trading random noise. So what you need to do is, recent news is just basically normally not so important as the bigger picture. So always focus on the bigger picture and trade longer term. Now, in terms of another bias that we have, it's the bandwagon bias, or running with the herd. Now, as humans, we've survived over the centuries because we've banded together. And we're a very sociable animal. We don't like to be on our own. So if in doubt, we want to do what other people do. And this is absolutely fatal in the forex markets. Now, in real life, you'll see lots of instances of the herding of humans. And also, we like to look up to people we think know better. And perhaps one of the best examples of this is when you see a celebrity basically endorsing a car to drive or a washing up liquid. Do they really use it? Do we really care? It's known fact though, but if you put a celebrity to endorse a product, the sales normally go up if it's a well-known celebrity. It's ridiculous. But you get this in the forex markets as well to a degree. We want to look up to people. So you get a whole host of gurus and people who call themselves experts who basically give out information on the markets, and people follow them. Most of these people are not experts, and you shouldn't be following them. Let me give you probably the worst example. Ever been to dailyfx.com? It's a huge site on the net for forex traders, massive following, and you've got guys on there who are the so-called experts. They've all got fancy names like quantitative analysts or senior currency strategists, and traders fall for this and think that they should follow them. But if you actually look at the site and what they're doing, basically they're just not giving you anything that will help you trade. Most of it is overcomplicated. It's all this could happen, that could happen, and of course it does. Traders fall for it and think the guys are wise. You've got to get out of looking at too much analysis from other people and do your own analysis. Keep it simple and focus on yourself. Okay, now in terms of experts, sure, if you want to mend a washing machine or a car, you call an expert, he does it. In the finance markets, there is no such thing as an expert you can follow. Most experts are frighteningly wrong, and you need to have your own opinion. You don't want to be with the herd. You don't want to be doing what they're doing. I've also noticed in forex trading that most of the so-called perceived wisdom on how to trade forex is absolute nonsense. How many predictive strategies do you see saying that they can predict the future in the markets? we cannot predict the future. We actually have to deal in the here and now. Prediction, it's rife all over the net, and this is a common mistake beginners make. They look for that secret code of the market. You've seen all these ridiculous scientific theories, Fibonacci, Gartley patterns, Elliott wave, Gann. None of those guys ever made any money trading forex. Forex traders band together, use these strategies, and listen to experts that are basically saying they work. They don't. So I think when you come into the forex markets, always remember the herd are wrong about what it takes to make money at forex trading. That's why so many traders lose. So do your own research and basically come up with a logical, simple strategy that's based upon trading the here and now. You know you're going to get losses. Doesn't matter. Overcome the outcome bias. Always remain very mentally alert. Do not get into mental inertia. Do not fall for the recency bias that every little twist and turn in the market is explainable. It isn't. You focus on the bigger picture. So thank you very much for watching this short video on biases that can basically cause you to lose at forex trading. I think it's one of the basics of forex trading. You must understand these biases and you must overcome them to win long term in the market. So thank you very much for watching me as per usual. Take care. Have a good day.